name is Mojisola Oluwapimi, and I'm a manager of Ascension Consulting Services. And today we'll be discussing about the Finance Act amendment as it relates to capital gains tax and Customs Excise Tariff Consolidation Act. Capital gains tax is a tax on all chargeable gains in Nigeria or chargeable gains that are brought into or received in Nigeria. Chargeable gains relate to gains arising from the disposal of chargeable assets. And Section 3 of the Capital Gains Tax Act actually provides a list of chargeable assets, and this includes all properties, option, debt, and intangible assets. It also includes currency other than Nigerian currency that are disposed in Nigeria. So the Finance Act 2019 amends three sections of the Capital Gains Tax Act. Section 32, Section 32, Section 36, and Section 46 of the Capital Gains Tax Act. For Section 32, where assets are transferred between related parties for the purpose of business restructuring or business reorganization, capital gains tax will not apply on such transfer. However, there is a condition. Where the asset is then redisposed within 365 days, that exemption will no longer apply. Section 36 actually increases the amount exempted for compensation of loss of office from 10,000 naira to 10 million naira. So where in any year of assessment an individual receives an amount of 10 million naira for compensation for loss of office, 10 million naira or below, that amount will be exempt from CGT. However, any sum received above 10 million naira would be subject to capital gains tax in that year of assessment. Okay, so Section 46 actually replaces the word board with service, that's the Federal Inland Revenue Service, and also defines recognized group of companies as a group of companies as recognized under the relevant accounting standard, which is the International Financial Reporting Standard. Legal basis for the position of customs and excise duty in Nigeria is the Customs Excise Tariff Consolidation Act 2004. No, not all imported products are subject to customs duty in Nigeria. So the second schedule of the Customs Excise Tariff Consolidation Act provides a list of items that are exempt from customs duty, such as arms and ammunition imported by the Nigerian Police Force, military hardware and uniforms, items imported for the President of the Federal Republic of Nigeria to the extent that those items are not locally available in Nigeria. We also have goods imported for consular officers and passengers' baggages such as personal and household effects. Also, the Finance Act amends Part 3, Section 21 of the Customs Excise Tariff Consolidation Act, and now all imported goods brought into Nigeria will be liable to excise duty. Prior to the amendment by the Finance Act, only locally manufactured goods were liable to excise duty in Nigeria. However, the Finance Act provides an exemption for goods that are not locally available in Nigeria and raw materials that are not available in Nigeria. Yes, there are a number of incentives available to exporters of Nigerian products. We have the Export Expansion Grant. We also have tax exemption for the profits realized from export proceeds. However, on the condition that those export proceeds are actually utilized in purchasing plant equipment, raw materials, and spare parts used in production. And also, the dividend declared by wholly export companies are actually not subject to CIT in Nigeria. Well, why manufacturers actually pay for customs and excise duties? The burden is actually passed on to the consumers as customs and excise duties are indirect taxes. For more questions, kindly click on our help desk icon and we will definitely respond to you. Thank you.